Chapter 11, Introductory Comments, Current Liabilities and Payroll, primarily about current liabilities and using payroll as an example that reflects current liabilities. In terms of payroll, employers are responsible for paying wages to their employees and also making payroll taxes payments to government agencies. For demonstrating current liability recording in payroll accounting, key terms on the back of the chapter, recording gross pay and net pay in the same journal entry, along with income tax withholding that applies to the employee, and other liabilities such as deductions for credit union or insurance, a portion of the insurance that employees pay out of their gross payroll. These are elements of the, there's three major journal entries related to payroll that you need to be very familiar with in this chapter. These items are the subject of the first payroll journal entry, where salary or wages expense are recorded gross. Several withholdings are made from the net pay. They're all payable to either government agencies or insurance that the employee is responsible for paying, any credit union voluntary deductions, and finally the net pay, salary payable to the employee. All these are current liabilities and is the first journal entry you must do related to the payroll entry for employees. Included in the employees' withholdings are FICA, which is Social Security tax withheld from their pay. The second journal entry has the employer matching that FICA. That's an expense for the employer, and also accruing for unemployment taxes that it's the responsibility of the employer. This is the second journal entry. Again, employer-related payroll taxes, they're expensed, and liabilities are set up for the matching portion owed of FICA to the government. They match that which was withheld from the employee, plus they pay federal and state unemployment taxes, and so they're accruing for them in the second entry that you best be familiar with, employer payroll tax expense. Expensing the taxes the employer will remit to federal or state agencies. All the payroll-related information is recorded in a payroll register maintained by the employer. By the way, these page references are from an instructor edition and don't correspond to your particular text. And the final entry you should be familiar with is actually payment of the net pay to employees. Simple entry. Debit salaries payable, reducing it. Credit cash, reducing it. Issuing checks. Third journal entry, paying employees the net pay. The net pay that came from the original entry, number 1, established when recording the gross salary or wages expense for the employer. Salary expense refers to fixed salary payments as opposed to wages expense, which are hourly employees. So salaried employees, hourly employees. Your chapter will generally have these separate expense accounts, but again, it's the gross payroll earned by either salaried personnel or hourly personnel. These journal entries are summarized in the Momentum handout. First journal entry, recording gross wages, debiting expense, setting up various current liabilities. The second journal entry recording the employer payroll tax expense, setting up the various tax liabilities payable to state or government agencies. And the last entry, writing checks to employees, reducing salaries payable, reducing cash. Those are three journal entries that you need to be very familiar with in this chapter. Again, this is a handout on Momentum. Momentum has a list of various current liabilities. Included in this chapter is comments about sales tax payable, items collected from a customer and remitted to state agencies. The journal entry for making a cash sales example, $100 cash sale, where the business collects $106, including $6 tax. That $6 tax is not belong to them, it's a sales tax payable. They must record that as a current liability in their ledger. Again, example of a 6% sales tax levied at time of sale. The total amount of the sale is recorded plus the collected amount, which has to be booked as a current liability. You'll see problems in your text that indicate what the sale amount was and the applicable sales tax to that transaction, and you have to record the total entry. 6% times the amount of sales gives the sales tax payable. There's another way that this can be presented in the chapter. Different wording of the problem. They may tell you that the business collected $106 of sales tax, $106 of total cash from the customer, of which 6% is sales tax. Record the rest of the entry. First, you have to determine what the actual sales that belong to the business were. It's not 6% of 106. In this case here, if you're given the total cash collected, it's $106 divided by 1 plus the sales tax rate, giving $100 credit of sales. That's what the business is going to take. The rest, sales tax payable, recorded. So again, a problem might simply give you the total amount of cash collected and the applicable sales tax, and you determine the rest of the entry. Do not multiply this times this. Take total cash received divided by 1 plus the tax rate to force out the sales only belonging to the company, and then the difference is the amount owed to the state agency. So be able to record such transactions given either total cash collected and the sales tax rate, or amount of sales made in that same sales tax rate. This is much simpler up here. This is a little more difficult calculation. As mentioned, employers will record all their information in a payroll register before they make any of their journal entries. This payroll register is the basis for all their journal entries. Example in the book. By employee, they will list the current salaries and wages earned by the employee and all the withholdings from each employee, which must be calculated individually. It's another term for FICA plus. Medicare withholding, Old Age Survivor Disability Act. Key takeaway is that the payroll register is maintained by employee. Individual deductions, some of these are subject to a ceiling, a maximum amount And so therefore, the deductions have to be computed by employee. But it starts with a listing of earned wages. In this case here, gross wages, a salary of $28,580. That is the debit to gross payroll in the first journal entry. Last line on the payroll register. And all these other withholdings become current liabilities totaling this amount. So total gross wages and salary less total withholdings is a net pay of $20,326. Part of that first journal entry. Net pay owed to employees. They've earned this much. This is what we paid to the employee. Since some taxes, such as FICA, have a maximum limit, the employer must keep track of the wages earned before the current period, and then the cumulative wages by employee, because some of these withholdings will be maybe maxed out at a certain time. What do I mean by that? Handout of momentum. Some of the withholdings have a ceiling, that is a maximum cumulative wage base that's applied by employee, beyond which the employer does not withhold taxes. For instance, FICA. This is a wage base ceiling that changes about every year. Currently it's around $132,000. Check your book for the assumed rate for homework problems. What this means is cumulative wages for an individual employee above the ceiling amount do not have FICA withholding, and also do not have matching FICA tax for the employer. So some tax withholdings are subject to a ceiling, not all of them. FICA is one that has a ceiling. Federal and state unemployment, which the employer pays, has very low ceilings, less than $8,000 per employee. And once an employee exceeds the ceiling, the employer stops accruing federal unemployment taxes. So it's important to understand the concept of a ceiling that applies to certain withholdings from employees and some of the taxes that the employer pays. So FUT and SUT are both subject to a ceiling which is fairly low, but per employee. Ceilings are applied per employee. Hence the need to keep this register by employee. But the bottom lines here become the basis for recording that first journal entry. All the information in that first journal entry comes directly from the payroll register. Summary totals, all employees, all withholding, a summary of all net pay for all the employees in that first journal entry, direct from the payroll register. But it all starts with the current period earnings by employees, gross earnings. All the deductions are current liabilities. Net pay is a current salary payable or wages payable liability as well.